Okay, let's unpack this. We're seeing these huge shifts in global finance, right? Digital currencies are just, well, changing everything, how money moves, how economies connect, even how nations kind of assert their financial independence. If you look at stablecoins right now, I mean, they're fundamental to the digital economy. It's almost all US dollar stuff. USDT, USDC, they're everywhere. So what happens when a major economy like a real powerhouse like Japan decides, okay, we need our own path here? What if they want their own currency, the yen, to stand tall in the digital world too?
Yeah, and what's really fascinating here is that Japan is doing exactly that. And they're doing it with this typical Japanese approach, very forward-thinking, but also super meticulous on the regulatory side. We're basically right on the edge of something pretty significant. The formal approval of JPYC, Japan's very first yen-denominated stablecoin. So our mission today in the steep dive is really to pull back the curtain on this. We want to explore, what JPYC actually is, why its approval is such a big milestone, not just for Japan, but for the whole crypto market globally, and what the ripple effects might be for financial sovereignty, for digital finance, architecture, everything.
Absolutely. And look, to really get the full picture, we've dug deep. We've pulled together a stack of insights for you. We've gone through articles from, the big names in crypto and finance news, The Block, Cointelegraph, Invest, Brave New Coin, BN Crypto, even checked foundational stuff on Wikipedia just to make sure we're covering all the bases. We want to give you that comprehensive view. So don't worry about getting swamped with info. We'll distill the key stuff, the surprising bits, the critical insights. You'll get the full story without, drowning in data. Let's just dive right in. So the main news, the thing causing all the buzz, Japan is right there on the cusp of approving JPYC, its first yen stablecoin. This isn't just talk, it's happening. Japan's main financial regulator, the FSA, the Financial Services Agency, they're prepping the paperwork. Word is approval could land as early as this fall. That's really soon. Weeks or months, not years. It's happening right now, kind of launching a whole new digital life for the yen. And the company making this happen, a Tokyo fintech called JPYC Inc. They're central to this, not just some random startup.
They're being really strategic about fitting into Japan's, let's be honest, pretty strict regulatory system. What they're doing is registering as a money transfer business. That specific designation under the Payment Services Act is crucial, absolutely vital. Without that, they couldn't legally issue JPYC, not under Japan's rules. It's a tough hurdle they're clearing. It shows they're serious about compliance, about being stable long term. Okay, let's get into the mechanics. How does JPYC actually work? Because this is where the trust comes in, right? It's designed for a strict 1.1 peg with the yen. One JPYC token equals 1 yen held in reserve. So totally different from, those algorithmic stablecoins. But here's the really key part, the differentiator. The backing isn't just some vague fiat reserves. It's explicitly backed by bank deposits and Japanese government bonds, JGBs. Just think of what that means for stability, for trust, especially for bigger players, institutions.
Exactly. When you know your digital currency is backed by actual yen in audited bank accounts, and by the sovereign debt of a major stable economy like Japan's, that builds a lot of confidence.
Right. It connects the new digital stuff directly to the old school regulated financial system.
It's not just a token, it's like a digital extension of Japan's actual financial backbone. And if we put this in context, think about Japan's recent moves with digital assets. This isn't just notable, it's a strategic pivot, a big one. Remember, earlier this year, Japan actually greenlit USDC for domestic use, which was already quite forward-thinking, letting a major US dollar stablecoin operate there under their rule.
Yeah, that was a big step already.
But now we're seeing a deliberate shift. They're moving past allowing foreign coins to actively developing and approving their own homegrown one. This isn't just about having more options. It shows Japan's stance on digital currency is evolving, getting more ambitious.
So less reactive, more proactive.
Precisely. It's a clear signal. They're moving from cautious acceptance to strategic development of their own sovereign digital currency setup. It shows they don't just want to participate in the global digital asset game, they want to lead, especially with their own currency. It points to a future where digital finance isn't maybe quite so dominated by just one foreign currency, more multipolar.
Okay, and this is where it gets really interesting, doesn't it? Because it's not just about a new token. This goes right to the heart of national financial implications. Introducing JPYC is seen as a very deliberate move to reduce reliance on dollar-pegged stablecoins like USDT and USDC, which brings us to this whole idea of financial sovereignty in the digital age.
Right.
What does that actually mean here?
Well, essentially, it's a nation's ability to control its own monetary policy, its digital financial rails, the flow of its currency online. It means managing the yen, influencing interest rates, reacting to economic shifts without being overly dependent on or, potentially restricted by another nation's policies, especially the US dollar, which dominates stablecoins now.
Right, because if something happened with dollar stablecoins globally.
Exactly. Geopolitical issues, regulatory changes in the US, economic shocks. Having a yen stablecoin backed by Japanese assets under Japanese law gives them a buffer. Resilience, autonomy.
It lets Japan protect its economic independence in this increasingly digital world, keep its financial system strong and self-determined.
It's a strategic play, long-term stability, long-term autonomy. And that shift naturally makes you ask, okay, what's the economic impact, particularly on Japan's huge bond markets? As you said, JPYC reserves aren't just cash. They'll be held in Japanese government bonds, JGBs.
Right.
So there's a direct, tangible effect. JPYC reserves could increase demand for Japanese government bonds. If JPYC Inc. issues a lot of these stablecoins and part of the backing has to be JGBs, well, that creates a new buyer, a consistent digitally native source of demand.
And more demand usually means higher prices, lower yields.
Basically, yeah. Especially for the shorter-term JGBs that stablecoins tend to prefer for reserves. It could potentially affect yields. But it's not just simple supply and demand. We have to remember the context of the Japanese bond market. The Bank of Japan, the BOJ, has been doing unconventional stuff for years. Quantitative easing, yield curve control, keeping those long-term yields capped.
Okay, so how does this new digital demand interact with the BOJ's policies? That's the $1 million or maybe the billion yen question.
Exactly. Could it act like a sort of unintentional digital QE propping up government debt? Or maybe if JPYC gets really big, could it create weird liquidity issues in certain parts of the JGB market?
Interesting. So it's crypto and traditional finance really bumping up against each other.
Directly. It's a fascinating interplay. The implications for the BOJ, managing inflation, stimulating growth, they're subtle, but they could be really profound.
And we've kind of seen a version of this movie before, right? With the U.S. stablecoin playbook. Companies like Tether and Circle, the guys behind USDT and USDC, they hold massive amounts of U.S. treasuries, like huge amounts.
Absolutely massive. Their holdings are big enough to actually influence treasury auctions sometimes, even impact short-term money market rates.
So drawing that parallel, JPYC could potentially impact JGB markets in a similar way.
That's the idea. Now, scale is obviously the big question. JPYC Inc.'s initial target, $1 trillion, sounds like a lot, but compared to the entire JGB market, which is trillions and trillions, maybe it's modest at first.
But it's not just the initial amount, is it? It's setting the precedent.
Exactly. It establishes a new digital source of demand for government debt. That's the structural shift.
And it's not a one-off thing. It's continuous demand that grows as JPYC gets adopted more widely.
Right. Over time, if JPYC grows and maybe other yen stablecoins follow suit, this could actually become a noticeable factor in JGB pricing and trading, slowly influencing yields, market dynamics.
So even a subtle influence could matter a lot for Japan's borrowing costs and overall financial health.
Definitely. It fundamentally ties the digital economy to Japan's sovereign financial strength in a way we haven't really seen outside the US dollar space. And stepping back from just the economics, that this whole move really highlights Japan's approach to regulation. It's incredibly forward-thinking, almost pioneering, you could say. It shows their ambition to lead in regulated crypto adoption. They're trying to strike that balance, and it's often a really tricky one between fostering innovation and ensuring really strong regulatory oversight, protecting consumers.
That balance seems key to their whole first-mover strategy.
It is. They're not just launching a stablecoin. They're showing how to do it responsibly, securely, building that institutional trust from day one. They seem to be aiming to create a blueprint, showing other countries that, yes, you can innovate without sacrificing stability or safety.
And that clear framework is what makes them stand out globally, where things can be so uncertain sometimes.
Absolutely. And this wasn't just conjured up overnight. It's built on serious legislative groundwork. Specifically, Japan's 2023 Payment Services Act revision. That was the real game changer because it explicitly defined stablecoins as currency-denominated assets,
Giving them actual legal status, taking them out of that gray area.
Exactly. That legal clarity is crucial. It's the foundation JPYC rests on. But it's more than a definition. The Act demands serious stuff. Robust AML KYC, rules about keeping customer funds separate so they're safe if the issuer fails, regular audits.
It's a serious guardrails.
Very serious. That level of scrutiny written into law is why this approval process is happening now. Japan basically built the tracks before running the train, and that's what gives institutions, traditional finance, even everyday users real confidence. It positions Japan as a very serious, very responsible player.
Yeah, and thinking about those blueprints, what's fascinating is how this sets Japan up globally, especially in Asia. The race is definitely on, right? To create clear rules and attract crypto innovation. We know Hong Kong and Singapore are also pushing their own stablecoin regulations. They're actively trying to attract capital, talent.
It's a competitive space.
But Japan seems to have this clear, bold ambition to be first mover in Asia and setting up a regulated stablecoin market. What does being a first mover really mean here, practically?
Well, it means getting a head start and attracting the best blockchain developers, the most innovative fintechs, the big investment dollars. It means potentially setting the standard for yen stablecoins, maybe even influencing how other Asian regulators think about this.
So shaping the market instead of just reacting?
Pretty much. It allows them to define the narrative, the structure, the future of this market. It's a strategic play for regional digital leadership. And we're already seeing some really strong signals that the global players are noticing, that they have confidence in Japan's approach. There's this very significant detail. Circle Ventures, that's the investment arm of Circle, the company behind USDC.
Yeah, the second biggest stablecoin.
Right. They invested about $500 million in JPYC's Series A funding.
$500 million yen. From Circle into a yen competitor. That's interesting.
It's more than interesting. It's a clear sign that global stablecoin players are betting on Japan. Why would Circle do that? It's not just diversifying, it's strategic.
Okay, what's the strategy?
By backing JPYC, Circle gets early insight, maybe even some influence, into Japan's regulations, how the market adopts it, what yen users need. It could open doors for future collaboration, interoperability, maybe white labeling, maybe offering stablecoin as a service in a market with clear rules.
So hedging their bets in case the stablecoin world becomes less dollar-centric?
Exactly. Ensuring they have a foothold no matter which currency gains traction digitally. It's powerful validation. It says Japan's approach is seen internationally as credible and strategically vital.
Okay, let's zoom out for a second. To put JPYC in perspective, how big is this global stablecoin market we keep talking about? It's massive, right? Over $286 billion and still growing fast.
That's huge.
But the stark reality is it's almost entirely dominated by USD tokens. USDT and USDC make up, what, over 90%?
Easily. Other fiat stablecoins are tiny in comparison.
So when we talk about Japan carving out a share with JPYC, that's a potentially massive untapped opportunity, isn't it?
Immense. A strong, regulated yen stablecoin opens up completely new avenues. Think about international trade, hedging against dollar risk, or even just doing DeFi without only using dollars.
Right, for businesses or individuals dealing mainly in yen or anyone wanting to diversify away from just USD assets.
JPYC offers a regulated way in and out. It could streamline cross-border payments, open new investment paths.
And it's worth stressing again when you compare globally. Japan's rules stack up really well, don't they? Especially against places like Hong Kong and Singapore.
Yeah, without getting lost in the weeds of comparing every single rule, that's maybe another deep dive.
Oh, maybe.
The general feeling among experts is that Japan's framework from that 2023 act is really robust, comprehensive, proactive. It sets a high bar for protecting users, full backing transparency, clear redemption rules.
And that strong framework isn't just a barrier, it's actually a selling point.
Absolutely. It builds trust with institutions, with traditional businesses. It makes Japan look like a safer, more attractive place to do stablecoin business than many others. That clarity really differentiates them and boosts their position in this global race. It shows regulation can actually drive innovation, not just slow it down.
Okay, so Japan's laid all this careful groundwork.
Mm-hmm.
What does the future look like for JPYC itself? They got some pretty ambitious targets, I read.
They do. They've set a goal to issue up to 1 trillion over 3 years.
1 trillion yen. What's that in, like, US dollars?
Roughly, depending on the exchange rate, maybe $6.57 billion.
Wow. Okay, that's not insignificant.
Yeah.
Especially for a new non-dollar stablecoin.
It's substantial. If they hit that, JPYC becomes a serious player outside the dollar zone and a major force domestically in Japan. It really signals their confidence and the demand they expect for a regulated yen option.
And what would people actually use all that JPYC for? What are the use cases they're thinking about?
They're mapping out several really practical uses that could genuinely change things. First, remittances. Sending money internationally, as you know, can be slow, clunky, expensive.
Oh yeah, the fees can be killer.
Right. JPYC could make sending money to or from Japan much simpler, much cheaper. Think about workers sending money home or small online businesses trading across borders. Doing it almost instantly with tiny fees, skipping the old banking networks, that could be huge for financial inclusion.
Okay, remittances, that makes sense. What else?
Then there's something maybe a bit more complex, carry trades.
Ah, okay. For our listeners who aren't deep in Forex, explain carry trade simply.
Sure. Basically, you borrow money in a currency with low interest rates historically. That's often been the yen. Then you invest that borrowed money in something else, another currency, maybe that pays a higher interest rate or yield. You're trying to profit from that interest rate difference.
Right. Buy low, sell high, but with interest rates.
Kind of. And JPYC could really streamline yen-based carry trades. You could execute them almost instantly, on-chain, cutting out delays and maybe some costs of traditional finance. It opens up new arbitrage chances, more efficient ways to use capital, especially in DeFi.
Still risky though, right? Currency moves, smart contracts.
Oh, absolutely. Carry trades always have risk. But JPYC could provide a super efficient digital pipeline for those strategies, make them more accessible.
Okay, remittances, carry trades. What about the big one? DeFi, decentralized finance.
Yeah, that's potentially transformative. Right now, DeFi is overwhelmingly built on dollar stablecoins. USDT, USDC, they are the main liquidity, the main trading pairs, the foundation for lending.
Everything's priced in dollars, basically.
Pretty much. So a regulated yen stablecoin like JPYC, that could really shake things up, especially for people looking for non-USD exposure or just wanting to diversify. It could create totally new liquidity pools, enable yen lending and borrowing on DeFi platforms.
Provide an alternative for people hedging dollar risk or managing yen liabilities.
Exactly. Or just people who prefer dealing in yen. It could bring DeFi to a whole new user base, unlock significant new capital flows, especially across Asia, where the yen is so important.
Making DeFi truly multi-currency.
That's the potential, yeah. And if we circle back quickly to the JGBs, the government bonds, that 1 trillion issuance target forces us to reconsider that impact. Now, is 1 trillion over 3 years enough to drastically move the entire JGB market immediately?
Which is enormous, as you said.
Exactly. So maybe not a huge shockwave right away, but the real significance isn't just the immediate volume, it's setting that precedent.
Establishing that new digital regulated source of demand.
Precisely. Within the core financial system, it opens the door for more growth later, JPYC itself, maybe other yen stablecoins. And as institutions adopt JPYC more, their reserve holdings in JGBs could grow significantly over time.
So the initial impact on yields might be subtle, but the long-term cumulative effect could be substantial.
It could become a consistent structural factor. It's not just about crypto. It's about deeply integrating digital currencies into Japan's traditional finance, potentially offering new ways to manage debt and stability. It's an evolution, but potentially a very significant one.
Wow. Okay, what an absolutely fascinating journey through JPYC this has been. So just to quickly recap the big takeaways, JPYC's approval isn't just another token launch. It's a major strategic move for Japan. It's about financial sovereignty in the digital age, reducing that reliance on dollar coins. It really highlights Japan's unique way of balancing innovation and strong regulation, possibly setting a global example. And the backing by JGBs. That has really interesting potential effects on bond markets and links digital finance directly to sovereign stability. Japan's definitely making a statement here. It'll be crucial to watch how this unfolds.
Absolutely. And this really leads to a big question for you, our listener, to think about. Do you actually believe Japan's yen stablecoin, JPYC, can genuinely challenge the dominance of giants like USDT and USDC? Or is it more likely to carve out its own important but perhaps distinct niche in the global system? And maybe more personally, given the strong regulation, the backing, would you feel confident using JPYC in DeFi compared to the stablecoins already out there? It's definitely something to ponder as this whole landscape of digital currencies and national strategies keeps evolving so incredibly fast.
Great questions to leave people with. And hey, speaking of evolving, if you found this deep dive useful today, if you learned something new or got some clarity on JPYC, please do us a quick favor. Hit that like button down below. Even better, leave a comment. Tell us what you think about JPYC challenging the dollar coins. And definitely subscribe to the channel if you haven't already.
Yeah. Your engagement, honestly, it makes a huge difference. It helps support the channel, tells the algorithm people find this valuable, and it genuinely lets us keep creating this kind of in-depth crypto content and analysis for you.
We really appreciate your support. Thanks for diving deep with us today.